a sound check? Okay, we'll get started here in just about a minute, folks. Welcome, folks, to the Kendall Report. It is roughly a little bit after 8:15. We're starting a little bit later, trying to let the database catch up because of the clock and the time changes. So anyway, we had a big day. That cycle top a few days is starting to show its power right now. We did trade down to some interesting support levels, and it looks like we may hold these levels. I'll go through the details in the technicals here in a few minutes. But the bottom line is it was a reasonably ugly day, especially for the NASDAQ. We look at the S&P down 0.82, NASDAQ down 1.66, and the Russell down 1.55. So it was a pretty ugly day. One of the things that really was triggering, obviously, was the CPI coming in at 0.9, expected to come in at 0.6. So much for the transitory, right? That's getting a harder and harder story. I actually saw, it's interesting, there is still a mainstream economic view out there that this stuff is going to start to slow down from here. So maybe 0.6 is okay going forward instead of 0.9. And everybody's talking, not everybody, but a lot of folks, especially in the big institutional firms, are talking about all this stuff dissipating and the risk is going to start to go down and everything's going to be fine. And in last night's video, I talked a little bit about what the bond market was telling us. Well, the bond market was also the big focus today after this horrific CPI up 0.9 and 6.2 year over year, followed by the 8.6 year over year on the PPI. You know, these are big numbers. And it looked like that initially when the market was selling off, there was a little bit of a bid in the treasuries. I'm going to go through more of these details here in a few minutes. But that bid disappeared, and it disappeared for one reason. And I have been talking about this, I don't know for how long, maybe 2-3 years, maybe longer, is that we're just one bad bond auction away from disaster. And we saw one of those today. The 30-year auction that went off actually had what's called a 5-point tail, not trail, but tail, which that means is that they had to sell off the brand new bonds into a discount from what the previous markets were and what the offering rate was. And that's never a good sign. The coverage wasn't good. Nothing was good about this. And it was a 30-year bond. And we've already seen something starting to happen. And I'll go through this in more detail when I bring up the treasury charts and the spreads here in just a little bit. But what happens is we're seeing an inversion. So now the 30-year is actually, it's changed a little bit, but it's starting to come below the yields of the 20. And until the spike today, and this is going to be a little bit of a different scenario, we're starting to see a collapse of the yield curve. And I talked a lot about this. It is that this flattening situation is getting more dire, and this is potentially going to cause the Fed to have to make some moves long before they're ready. And I think what we're seeing here, that was part of the action as well. You saw a big bid in the dollar, right? The dollar goes up, gold goes up, all these things you're kind of looking at why is all this moving like it is. And I think the dollar traders, I'm going to cover the dollar here tonight just to talk about some of the elements that are coming up in those charts. And, you know, they're possibly signaling that they think the Fed's going to have to do liftoff, which is starting to raise rates earlier. I know the percentage probability went from July to June. I think it's 67% probability for an increase in June. Now it was July. So that also suggests that they're going to have to taper faster. But, you know, let's hold the phone for a minute, because really there's another thing going on. I've been talking about the economy stalling here. What if the economy slows down? We've got this you know where I'm going, 1970s style stagflation. And a lot of these things, there's like people are saying that couldn't happen, is starting to show up here. And I think I think markets are getting very concerned about this. I don't really have an opinion on it at the moment, other than I think things will start to slow down. I don't think there's this robust reopen trade next level to go out. I think there's a lot of things going on, and I'll start to focus on this as we go forward over the next several days, is also the slowing down in China can actually end up having an effect as well on the world economy. Let's face it, they're second largest economy on the planet. So I got real estate woes. They got all kinds of issues going on, energy shortages, you name it. There's a lot going on there. I'm going to spend some time starting to research some of this as we go forward. A couple other things that did come out yesterday. Claims came out, no big deal. Nobody was worried about claims. Came in at 267. I think that was a new low or better numbers since the whole situation of the pandemic started, at least. And then the continuing claims actually upticked a little bit, 1.16. And that number is probably going to stall here. And the number I'm going to watch is a number that I've talked to you about before, is that 2.5 million level. If we get above that level, there's going to be some other things starting to flow out of the, not just the economy, but the job market and all of that. And, you know, it's going to get interesting. I think on Friday we get the JOLTS number, which will give us jobs openings. So there's still some things coming out. Banks are closed tomorrow, so the bond yields aren't, bonds won't be trading tomorrow, which is sort of interesting, right? So what are traders going to be triggering off of tomorrow? They're going to have to just look at market sentiment, and at the moment it doesn't feel very good, but we did, as I'll go through details in a minute, we did get STX buy signals on quite a few things. And last night's video I covered Tesla. Tesla had an STX buy signal and got a nice rally today and went back into some of those levels I covered last night. So let's go ahead and get into the charts and see what these indexes look like. Okay, so we'll start with, as we usually do, with the futures. We're up 225 right now. Not really, kind of a little bit of a bounce from earlier numbers. We traded down. The low so far tonight has been 46.38. We'll go through the market grid numbers here in a minute, but we are seeing a little bit of a bounce. And one of the things I've been talking to you about for several days is that my expectation is that we're going to come in that 21 period moving average is going to come into play. Now the PPM rate on the 10 period moving average dropped below 15 today. It's at 12.17. So it has some positive attributes as far as that goes, but not anything really significant. The main number to watch for, the PPM2, is at 0.30, and that is moving averages continuing to come up. Let's go to full screen so we can look at this in a little more detail. So as we look at this is where I'm talking about this 21 period moving average is going to be the key average to watch. Right now it is at 45.82, so it's quite a bit under the market, but it is still jumping at about 14 handles per day. So that's going to be around this 46.20, 46.40 in the next three, 4 days. So it's possible that number that we printed yesterday could end up to be the lower bound of this trend. As I've been talking about for a number of days, I did not see, any major, decline coming from this, but at least a move where the 21 period moving average would come into play, and that's exactly what looks like is going to happen here. Now, from a PPM standpoint, I'm impressed with the action in PPM3, but PPM2 has crossed to its first derivative, still holding its second, and like I said, it's at a 0.30. PPM1 is actually crossed to first and second derivative, and this ultimately will set up some kind of consolidation up here. The extremes on the downside, we'll just look at the market grid for today. We're looking at, so far we printed 38, S1 32, R1 51, 52. So I'm going with an S1, R2 for today. So I am looking for a bit of a rebound, nothing substantial. We'll probably stay below the The 10-period moving average on, as far as the close goes, that's 46.50. That's only 7 handles from where we're trading right now. Maybe we get back above there, but around 62 should be the high. And unless there's something that comes out, like I said, the bonds are closed tomorrow, so people aren't going to be able to key off of what's going on in the bond market. So let's go to the SPX. SPX, as I mentioned, we closed both under the 10. That's 46.51. We're still at a 0.20. This will decline just a little bit more tomorrow on the open. But look at the market grid for today. Probably the S1 R2 is going to be where we're going to look. S1 is 37, so that would put us down about 9-10 handles. And R2 is 65. We could see possibility of an R3 if we get a little bit of buying to come in here. And we really had most of the big news that is going to come out this week. As far as that goes, like I said, there's some numbers coming out on Friday, but nothing really substantial from that standpoint. So we're going to be operating on whatever market sentiment is. When the bond market reopens on Friday, we'll have some guidance maybe from there. But we're definitely, this is a minor pullback that's happening. I don't believe it's the sign of something bigger. We're not seeing, I'm going to show you on the weekly chart here on SPX. We're not really getting any kind of rollover. We're still nice uptrends here. 45.06, major support on this thing. That's long ways from where we are right now. That's not really into play, but the PPMs are still in that trend maintenance mode that I've talked a lot about. You can see we're just maintaining that angle of attack. So nothing big here, nothing that you could point to and say there's some major decline coming. There's still some possibilities, going back to the daily chart for a second here. There's some possibilities of potentially printing down into this 21 period moving average, extreme 45.77. As far as the extreme for today, 46.09 is the extreme. And we've got support just looking at the SPX down to 46.18.09. That would be your S3 STX number for tomorrow. But this STX buy signal that we got should be good enough to at least have a little bit of a bid in this market and see some recovery. So the next market we'll cover here is the NASDAQ. NASDAQ had also, STX was 16,037. We closed 15,980. We're seeing a bit of a rebound. We're up 0.20, up 32 handles right now. Should head back towards 16,104. But this cycle that I was talking about, this hit on all the major indexes, or the ones that I follow on the channel, the S&P, NASDAQ futures, and on the Russell. We got that same signal back on 11.5, and we're seeing some follow through from there. But like I said, these are still very positive numbers. You got PPM2 on NASDAQ is at 0.37. That support number is 15,470. So that a spike down there would be an extreme, and that would be your buy the dip scenario. But I think yesterday when we got down around that 40, 42, 30, 38 level, that was on the S&P was a good buy. Same thing when we got down toward this, just below this 10-period moving average with this STX, it looks like to me, should get a little rebound. Ultimately, if I were to draw in what I expect here, is we see a sideways pattern set up here, some consolidation. I talked to you about the 8 days up, and we can get anywhere from 3 days, possibility of 5 days in the pattern, could extend out to 8 days as well. So we're looking at some kind of consolidation, sideways pattern set up, should rise, should stay above the values here on the 21 period moving average, which right now is 15,737. Let's look at the rate of change. looking at about 50, 65 handles a day. So expect that to be the key. And this is calculated real time, so this is the number for tomorrow pretty much. It'll change a little bit if the market rises anymore, but this is where the support is. We'll go to the Russell. This is Russell cash on the daily. STX 2395, 2389 close. So we got our STX buy signal here. All that means is that we get 1 to 2 days sideways. It could resume, and I believe the target for all of these indexes is for the 21 period moving average to come into play at some stage over the next several days, and that is still rising at 0.31 on this chart. So it's going to be in the next 2 or 3 sessions, so that would put us into Monday. Tuesday is where this will come into play, and markets should hold those levels. And like I said, with this STX buy signal, it just tells us that we're going to trade back into these ranges. And we look at the expectations, that would put us into around 2405, maybe as high as 2414 if we got a little traction here. But the PPMs on this are, we traded right on the 2381 is the 10 period moving average, and the PPMs are at 0.58. So that tells you there's only a 30% probability to close under that number. We closed right on it. So look for a bounce in all these indexes. I don't expect any kind of substantial big reversal or anything like that, but we should see the market stabilize a little bit here around this level. Worst case is these moving down toward this 21 period moving average. The market's got a little bit emotional yesterday, so we'll see what happens as we come into tomorrow. Let's take a quick look at the spread. They actually stayed stable in spite of the downtrend. The Russell wasn't down as much as the NASDAQ, so it's still on a relative basis starting, still slightly overperforming, but not really materially. So there's a lot of work to do there. So we'll talk about that as things move forward. So what I'll do is I'll go through the Dow here next, and then we'll go back to the Treasuries, and I'll check to see if the servers have updated so we can see what kind of action we got out of the models overnight. I want to go to the weekly on the Dow. This is a level I haven't covered the Dow for a while, and one of the things I think is important to look at is we're seeing the PPM 1. This is weekly Dow index. We're trading right on the 200 week moving average. That's 94.83, so we're actually just a little bit above it. And if you look at the PPMs, at the very bottom is the WaveTech 200. This tracks the angle of attack on the 200, and it's positive and accelerating. So if we can get above that and stay there, I still think there's some pretty big numbers. There's the pivot number on the Dow is actually, let me get to that. The pivot number is 95.62. So a break above that number would be substantial. We're probably looking at par plus on the Dow index. And remember, the Dow index, it's about 60% euro dollars in this index, so it's heavily weighted toward the euro. But the bottom line is the Dow looks really strong, and it looks like there's being bets placed there that somehow taper is going to get accelerated, rates are going to happen at liftoff is going to happen at a higher rate. So I'm going to go over real quick and just see if we've got got anything going here on the database, see if it's ready to go. I'm hoping that it is. Just bear with me 1 second. One more click. Yeah, so interesting rotation here. And what we're looking at here is 54.57. We got, I'm just going to have to roughly 700 buys versus about 1,000, we'll call it 1,100 sell signals. So a slight little negative rotation here from that standpoint. Let me zoom in just for a second so you can see that. So you can see the numbers here. So there's a slight negative rotation, but nothing big. And I'm going to continue to look at this and how the database acting as a positive. And this is one of the reasons why I've been talking about over the last several days. We got 8 days up. We get 3, maybe as many 5 days sideways. And we should be at a place where we can start to possibly move the markets higher. But there's definitely some challenges going on here. But as I said earlier, just reflecting on the indexes that I talked about, the underlying trends, intermediate, haven't changed at all. Nothing's going to change that in a material way just yet. So before you go getting crazily bearish on this thing, just hang tight for a minute, because I think there's some more structure that we need to see out of the markets. But I'm encouraged that the database is hanging in, because you can recall, if you go back, we had a lot of trouble getting over this 52%. So now we're, in spite of some selling that came in today, there's still, a very slight negative rotation, and also that the entire, database is remaining somewhat stable. Okay, just a quick chat before we go forward. I saw one of the funniest things ever. That Howard Stern is talking about running for president. Imagine that for a second. Let's go with that for a second. I thought that'd be a good laugh mid-session. How funny is that? And I think he's challenging Trump. He'll beat Trump, and that's how much trouble we're in. People like that are showing up. I made a comment the other day. It's like, can we find somebody that's at least younger than me to run this country and get some new blood out there? Hopefully, we'll get some not senile people like Nancy and Brandon and the gang. They're too old. We need some new blood, folks. Let's get that going for those of us in the U.S. here. Anyway, so let's get on to the rest of the show. What I want to go through going forward, we're going to do the 10-year. We'll talk a little bit more about this bond disaster that happened yesterday. We'll also get into looking at the yield curve again, because there's something going on here. Bond market's telling us something. There's a big story building here, and I talked about in the treasuries last night. I talked about how we were trading at 140, 142. That is like rock solid, the bottom. And boy, they snapped back all the way to 159. They actually went higher than I thought we would get to. But we also, if I go over to a daily chart, and I'll zoom in on this in just a minute, so bear with me while I just set up some of the dialogue. We got an RTX sell signal, so bonds are closed tomorrow, so we're not going to know what's going on. I want to see what kind of action we're getting overnight, so bear with me while I look at something here that will give me a little bit of a feel here. Yeah, so overnight trading 157, so still a decent bid from where it's at. It's still, or decent offer, we'll say, but rates staying somewhat firm. It's going to be, like I said, bond market's closed, so we're not going to have a lot of leadership here. But I want you to look at the PPMs here as I zoom in full screen. The PPMs just rocket. I was talking about we're trading right on the 200 day. We actually closed under the 200. Now we got this big bounce back. We're looking at the yesterday traded as high as 1.592. We traded right up to that 1.567, which was the 21 period moving average in here, and we stopped right there. That's where we closed. We closed right at the 1.56. We should, when we get this market trading, we should come back in a little bit. Just looking at what the RTX sell signal would mean here is that we're looking at, R1, R2, right at the highs that we printed on Wednesday is 1.598, so basically 160. On the downside, looking at 154, maybe 152 again. So it's all of a sudden you've got some other things in play here, which is the 40 period moving average, which is at 1.52. So we're back above that. That should probably be the floor now, especially with PPM3 actually cutting through its first and second derivative. So we're probably going to stabilize here. I talked about this last night that I thought we'd see some sideways movement. Let's go over and look at the weekly chart just for a second. And the weekly's sitting here all of a sudden right at the extreme 1.94, high 1.592. So we're right there at 1.59 is the extreme for the week. And I suspect that will be exactly where we go. Look for 152, could even come back to 1.48, something like that. But these things should stabilize here. All right, next market I'll cover here is the crude oil, and everything was blowing up, and I really didn't see the news today to see what was going on. They were talking about shutting down the pipeline, all that kind of stuff from Canada down to the U.S. through Michigan. Well, we got a big reversal yesterday. We printed all the way up to almost 85, 84.97, low 80.81. And now overnight, we're seeing a little bit of bid again, 81.67. I still believe that the extreme 79.07, probably 80.5 to 79, that's going to be your floor. It's encouraging, I think, from this daily chart that we're starting to see some stability, starting to see the PPMs trying to turn up. We'll see how these trade over the next couple of days. Just a quick look at the weekly. Weekly is just very neutral, and we're just staying in the range that I talked about the other night, 78. I'm sorry, 70. Let me get the right place here. 78 was the extreme I was talking about. S1 80.09, low 80.81. So we're just staying right in this range here. It looks. I think this thing will stabilize, and everything will probably stay in the sideways range. I think we probably have at least one more week climbing this 10 period moving average. It's going up about $1 per week, so that's going to come in at 79. So that's going to be the bottom end of the range for this one. So we'll go to gold next. I was talking about some of the things going on in gold. We printed up all the way to yesterday. We had a spike high. We printed up to 70. I've been talking about this price objective range toward the 53 possibility of getting up to it was 1852.90. Next 1889 is the next level. It looks like we didn't quite get an RTX sell signal, but it looks like we should stabilize a little bit. The 10 period moving average is going to be your major support, which is down at 1810. And we're seeing acceleration in PPM3, which is what I've been talking about to watch for. Once that starts to happen, then the trend on it short-term level will be confirmed once we get all of these averages starting to tick up pretty good. You'll notice even the bottom WaveTech 200 is starting to flip up as well. That is monthly that we're looking at, by the way, not weekly. So this is the monthly, and the high end of the range on a monthly is 1871, 1898. Don't think those could be reached pretty easily, actually, I think. Let me get to the weekly where I thought I was. So weekly, we've traded up to the extreme weekly, 1869. We printed right up there, high 1870, 60. So probably look to settle in, hang somewhere between the R2, R3 number, which is 1843, 1856. So final market we'll cover. I'll start with the daily on Bitcoin. Bitcoin's trading down towards its extreme. It's trading out pretty major support here. 63,516, 63,033 is the low right now. The market grid, 63,517. So we're trading right in that number right now. And I would expect to see this actually start to move a bit back into this range, but we should hold this key range between 63,517, 62,807. If we got below that, then there would be some downside risk down to about 57.6. I expect will hold along these lines here. We have decent PPMs going on the daily chart. We go over to the weekly, and weekly grid is a low 63,033, 63,702 is S1, so we're through that. Extreme 62, basically we'll call it 62,000 even, is major support there. And we're still got these crazy good numbers on all the PPMs across the board on the weekly, so there's a solid trend that's happening there. Okay, folks, got through another show, another day. Just a quick update. We got a lot done today. We're getting really close to starting this live trading room. We'll let you know as soon as we get it. I was hoping to be able to make an announcement today. But like all these projects, they just tons of little nitty-gritty things that have to be taken care of. So we'll let you know. I'm excited about this, especially like days like today, because it would have been nice to have a live trading room, and I'll give you the details once we get everything together and all of that stuff. So once again, I really appreciate you folks watching. It's as I always say, it's an honor to be able to work with you guys and do all that good stuff. So let's just in summary, let's expect to see some little mini rebound in these indexes for tomorrow on the market. Don't see a disaster here. So hang in there. Be careful with what you're doing out there, because the volatility is definitely kicking up again. Have a great evening, and we'll talk to you tomorrow night. Yeah, Gary, we'll let you know where to register. If you're not on kindlereport.com, you can put your name there, but you'll be notified. Yeah, all this stuff is coming. Trading View, Trading Room. Really excited about this opportunity to work with you folks. All right, folks, have a great evening.